Welcome back. It's great to have you with us on SABC News. A special broadcast now following the decision of the Reserve Bank's Monetary Policy Committee to leave interest rates unchanged. Now, earlier in the year, we were surprised with an interest rate cut. Good for indebted consumers, not good for savers. But at that stage, there was talk maybe more cuts to come. Now everything has changed, and we're talking about interest rate hikes in future. But let's get some analysis. I'm joined by Busisiwe Kganyago from Nedbank and independent analyst Ian Cruikshanks. Thanks to both of you. Let's start with you, Busisiwe. And I was interested in the 0.75% hike. He was talking about a cumulative hike by 2019 if things stay as they are. So we have to be careful about that. This is just a suggestion. But the Reserve Bank has never given exact sort of figures like this of what you can expect.
I mean, they call it their quarterly projection model. So it is something that I think it was released during sort of the monetary policy review, and it just tells us sort of an implied path for where interest rates should be. So it looks at things like the output gap and all sorts of things, sort of the inflation forecast, to more or less tell us where the repo rate is going to go. But it doesn't mean, as he said, as the governor said, that they're going to stick to it. They mean this is what it says at the moment. And if they sort of backdated this and they ran it for sort of the last time they had a meeting, it would have sort of projected sort of one sort of 25 basis point increase, but now it's projecting these three that they're seeing coming along. But as more data becomes available, they're going to change, so they can change their mind. It doesn't mean there still is an MPC, it still is a committee out there, but this could be thought of maybe as one extra sort of MPC member, but there's still that collective agreement of what we're going to do about interest rates. But they haven't done this before, and it's a new thing they've brought about.
Ian, as consumers, should we take it as a warning? Don't get complacent if you have debt, because we could see interest rates going up.
Absolutely. There's certainly complacency should be avoided altogether. You know, I think we know now, they have confirmed, we're in a rising interest rate cycle. It's just a question of how much each jump will be and when that will be timed. But there's no doubt about that. And that added on to a pretty somber outlook for the economy says that consumers and business sector should be very careful about new capital expansion plans or new consumer expenditure.
Not good. Let's talk about some of the projections, but first I want an opinion from both of you. Was this the right decision at this stage?
I mean, if you look at some of the keywords that he was speaking about, the governor was talking about during his speech, I mean, he said things like key event risks, uncertainty came out quite a bit, elevated uncertainty was a bit there. He spoke a bit about the policy environment. He spoke about the ANC's elective conference and what might happen there. He spoke about the fact that since the last MPC meeting, there is this chance that we might be downgraded. It has increased quite a bit. So around that elevated uncertainty, sometimes when things are just not going well, maybe you should just hang on and then decide later what to do. So this was sort of the market thought that this was going to be the decision. If you think about the last decision where the market, there were some people who thought, you know what, they're going to actually cut rates, and then they didn't. So what would induce them at this period to actually do something different than hold them? Because if you look at the risks to inflation, they have actually increased if you look at their forecasts. Because when they look at inflation, the MPC does not look at inflation sort of now, they actually look at a projection, and they've slightly increased the inflation projection there, and they're sort of worried about all these risks that might impact the rand, that might lead to higher inflation, and that's why in times like that you maybe should just hold on. So it's probably the right decision at the moment.
Yeah, in your opinion?
I support that altogether, and I think the fact of just listening to what Boozy was saying about the inflation risks, like the rand itself, the oil price, food prices have started to come down, have come down a lot, but then they emphasize the meat prices still in double digits. You know, all this just says that the risks remain high, and I think the Reserve Bank will be very much aware of that. They're not going to ease off the brakes for the time being, probably for the next 3 to 6 months. I think what they're more or less telling us, look, interest rates could be 75 basis points higher by 2019. I think the alternative is that it could be more, but not less. And I think that's what we have to bear in mind. It's a very restrained outlook.
Ian, somebody erroneously asked, so I think, are we still in a rate dropping cycle? Because the bank started to drop rates, but this must have been the shortest rate cutting cycle in history. And my question is, have things turned around? Not because of the fundamental global economics and things like that, but just because of this uncertainty, because the rand could go down, because we could face a downgrade. He's even talking about a less favorable path to fiscal consolidation. That's our budget. So this is all about South Africa not doing things correctly, perhaps.
Yes, and you know, he emphasized the global economic outlook, which is very important, because that's going to dictate international interest rates. And what it looks like is, if we don't carry, globally interest rates are likely to be hiked quite a bit more, and we can't avoid the world trend. We have to go with it, because we have to protect capital flows that have come in over the last year or two, and we have to make sure that that carries on, because it's going to be very difficult to attract capital to South Africa if and when, let's just say probably more likely when, we do get a national downgrade. So yes, expectations have been really for a lower trend returning. No, that's totally impractical.
But Sisiwe, do you agree when he speaks about elevated uncertainty? This is about politics, our local politics.
A big chunk of it is about what is going on with local politics. I mean, he actually said it. Usually I would have been like, oh my word, there is like a policy risk. But he was like, the ANC's elective conference in December. And like, it was absolutely clear that this actually does play into that. And it does play in quite a bit. So there are international factors there that also play into sort of our risk sort of in the country. But there are things out there that are local, and we shouldn't actually sweep that aside to say, yes, there is an elective conference coming. Everyone has read a newspaper. We definitely know there is infighting. There's all sorts of things happening there. We don't know who's going to be sort of the next ANC president, who might actually be the country's president, and what they actually stand for. And this is happening in December. They're going to be sort of thin trading volumes on the JSE at that time. So there is quite a bit of risk there. We might be downgraded. You know, there is quite a bit going on there. So I think a big chunk of it was what's going on here.
Before we go to break, I was also interested because it seems like nobody's really certain what the rand will do tomorrow if we are downgraded. And it seems like he's not certain either.
I mean, nobody is certain what it will do, because sometimes you have to think about how much of this has already been priced in. How much of this has the market already thought, you know what, they're anyway going to get downgraded, so we've actually priced this in. If you look sort of a couple of weeks ago, we went to market, Treasury went to market with a bond, and they were looking at bond yields for sort of our bond yields and the yield that was going on there, and they looked at countries that are already junk, and they looked at their bond yields. And our yields, sort of a comparative bond, our yields were actually higher. It was almost like, in a way, they were thinking, oh my word, these people are already junk. So you need to think about it that way. But also the rand might be cushioned by other things. If these flows that the governor is still talking about are still going to come into the country all this time, because everyone's still looking for that real yield, it might actually cushion the rand quite a bit. So we don't know how much of it has been priced in. People might already think we are junk, and then there's all this money still flowing in that might protect the rand, so it might not be as bad as what we're thinking.
All right, we have to take a short break, and when we come back, Ian, I'd like you to answer that question. What on earth is going to happen tomorrow if we are downgraded? Seemingly likely, but let's take a quick break. I'll be back with both analysts after the Reserve Bank decided to keep our interest rates unchanged for now. There is a warning that they could go up.